the bottom line is your credit score does not determine how much money you get approved for. Is your debt to income ratio, how much money you make compared to how much debt you have is what's going to determine how much you get approved for. And that's the lender who is the one who gives you the money. They're the one who verify all of that information. So when you're talking about self-employment, if you get paid, through your own means, not with an employee giving it to you, and you're writing your taxes off to make it look like you don't make enough so you can pay a little bit of taxes, you're now making it look like you don't make enough money on paper. So that's what makes you get approved for less money. So when you're self-employed, you want to make sure you're not don't overwrite off or write off too much, things in excess. There are other options like Liz will go over probably later if anyone wants to know about it, that there are, bank statement loans that's a little more requires different criteria, but don't write off too much stuff. Unless you got a lot of money, you can do the bank statement loan.
If you're the type of business owner who's writing off everything to minimize your taxes, and you're trying to get a loan that's backed by the federal government and you're not paying as many taxes as you should be, there's a disconnect. You're not going to, you're going to get qualified for a much smaller loan. We have bank statement loans that can help with that, where they don't have to. Yeah. And so the way a bank statement now because of the what's the word I'm looking for? Hold on. The Patriot Act. Okay. All loans, all applicants eventually will get their bank statements looked at. We ask for 2 months of bank statements, and that's part of it's just looking for money laundering. We don't care that you're going to Starbucks every day, that kind of thing. It's just looking for possible fraud and money laundering. Now, with businesses, they turn over, if they're trying to do a bank statement loan, they're not turning over their tax returns, they're turning over 2 years of your business bank statements and your personal. And people are going through line by line, and they're pulling out all the revenue, and they're taking out they're getting the average revenue received. They pull out the outliers. They won't even take. So if you get if your normal job is $1,000 that you're paid for, and then all of a sudden you get a really big contract and they pay you $6,000, they're not even gonna let you use that. They're gonna normalize the revenue received, and then they're gonna take a percentage of that. Because, it's business revenue and you have business expenses. So then based on the business and your credit and other things, they're going to say maybe 50% of that is what they're going to qualify you on for the mortgage.
Subscribe now.